Stop scrolling because one quiet banking rule change in 2026 could freeze your paycheck, delay your mortgage payment, or flag your own hard-earned money as criminal fraud. Almost nobody is talking about the new protocols hitting the ACH network this month, and if you use direct deposit or auto pay, your account is now in the line of fire. One wrong move or one unusual deposit could lock you out of your funds for days, even if you did absolutely nothing wrong. If you want to know the secret trigger that causes banks to freeze accounts in 2026 and how to avoid the digital limbo that is trapping thousands of families, you need to hear this audit. Subscribe to Tax Hack Pro. We follow the money and the legislative shifts that the big banks refuse to explain in plain English. Hit that subscribe button now so you can protect your cash before the next algorithm update hits your branch. The banking world is currently going through a massive overhaul that experts are calling the most significant shift in electronic payments in over 40 years. Whether you realize it or not, these changes are altering how your bank monitors your money, how they protect you from scams, and how quickly they will allow you to access your own paycheck or government benefits. This isn't just about small administrative changes. This is about a new framework from NACHA, the organization that governs the entire electronic payment system in America. We are witnessing the death of passive banking and the birth of active surveillance banking. Up until now, banks were primarily focused on the money leaving your account, what they call debit transactions. They were looking for unauthorized charges, stolen debit card numbers, or suspicious spending at merchants you've never visited. But as of March 2026, the rules have flipped 180 degrees. Now banks are legally required to monitor both the money going out and the money coming in. This is a massive shift in liability. This means your paycheck, your tax refund, and even a simple transfer from a friend are all being scanned by aggressive fraud detection AI before they are even cleared for your use. Regulators claim this is about security, but for you, it creates a massive false positive risk. The AI doesn't know you, it only knows your patterns. If you usually get paid on a Friday, but your company sends a midweek bonus or a reimbursement for travel, the bank's AI might flag that deposit as unusual and hold the funds for 48 to 72 hours while they verify the source. In a world where 60% of Americans live paycheck to paycheck, a 3-day hold on your primary income is a financial catastrophe. If you've ever been stuck at a grocery store with a declined card because of an automated flag you didn't know existed, you know how terrifying this can be. To stay protected against these automated freezes, you must subscribe to Tax Hack Pro and learn how to diversify your accounts so one algorithm doesn't have the power to starve your family. One of the few positive changes in 2026 is the new requirement for standardized transaction descriptions. We have all seen those cryptic codes like XYZ-1990RXV5 on our bank statements and had no idea what we actually bought. Starting this month, any payment related to your salary must be clearly labeled as payroll. Online purchases must be labeled as a purchase. This makes it easier for you to spot fraud, but don't be fooled. It also makes it easier for the government to track your income streams with total precision. The IRS now has a front row seat to your side hustles and freelance gigs because the banks are doing the sorting for them. The new rules also give banks a powerful tool called the Written Statement of Unauthorized Debit, or WSUD. In the past, if you saw a fraudulent pending charge, you had to wait for the money to actually leave your account before you could fight it. Now, banks can stop that payment while it is still in the pending phase. This is a huge win for people living on a tight budget, where even a temporary loss of $200 can cause a chain reaction of late fees and missed bills. But there is a catch. You only have a small window to trigger this stop before the money is gone forever. You need to have your bank's app notifications turned on and check them every single morning. But there is a darker side to this safety push that the mainstream news is completely ignoring. The U.S. Treasury is aggressively phasing out paper checks for Social Security, VA benefits, and tax refunds. By the end of 2026, the government is essentially forcing every single citizen into the digital banking system. They claim it's to stop mail theft and check washing, but it also means that if the new monitoring AI flags your account, you have no alternative way to get your money. There is no backup check in the mail. The set it and forget it era of banking is dead. You now have to be your own forensic accountant, checking your app daily to ensure your benefits haven't been delayed, mislabeled, or caught in a compliance loop. We are also seeing the expansion of the FedNow instant payment system. Money can now move between banks in seconds, 24 hours a day, 365 days a year. While this sounds convenient, it is also a scammer's dream. A criminal can now drain your account at 3 a.m. on a Sunday and the money will be gone and untraceable before the bank even opens on Monday. Because the speed of the system has increased, the security protocols have become much more intrusive. The bank is now monitoring your velocity, how fast money moves through your account. If you move money from your savings to your checking and then instantly to a P2P app, the system may assume your account has been hacked and shut everything down until you call them. If you are a victim of a social engineering scam where someone tricks you into authorizing a payment by pretending to be the IRS or a family member in trouble, the 2026 rules offer a shred of hope. There is now a specific legal definition for payments made under false pretenses. This gives banks more responsibility to help recover your money, even if you technically clicked authorize. However, the burden of proof is still on you. You have to prove you were manipulated. This is why keeping a clear paper trail of every text, email, and phone call is the ultimate tax hack. The battle over fees is also reaching a boiling point in 2026. While some federal caps on overdraft fees were blocked in the courts, states like California are taking matters into their own hands, capping fees for state-chartered institutions at $14. But don't be fooled, the national megabanks are still charging upwards of $35 for a single mistake. The best move you can make right now is to opt out of overdraft protection entirely. It is much better to have a card declined at the register for free than to pay a $40 penalty for a $5 cup of coffee. The banks want you to stay protected because that protection is a multi-billion-dollar profit center for them. The most important shift to watch this year is the move toward open banking. The Consumer Financial Protection Bureau is finally requiring banks to let you move your data easily between providers. This means if you are unhappy with your bank's new surveillance rules, high fees, or velocity holds, you can switch to a competitor without the usual weeks of paperwork. The largest banks must comply by April 2026. This is your chance to vote with your feet. Move your money to an institution that respects your privacy and doesn't treat every bonus check like a criminal act. Subscribe to Tax Hack Pro to stay updated on which banks are being the most aggressive with these new freezes and which ones are offering the best protection for your paycheck. We are auditing the debanking trends to see which institutions are safest for your hard-earned cash. As interest rates continue to shift, your high-yield savings account might not be as high as it was last year. With the Federal Reserve cutting rates aggressively in early 2026, you might see your earnings drop from 5% down to 3% overnight. Now is the time to look at CDs or other fixed-rate options to lock in your returns before the floor drops further. The banks are quick to lower the interest they pay you, but they are very slow to lower the interest they charge you on your credit cards. In 2026, the banking system is faster, more automated, and more intrusive than ever before. Your bank is no longer just a vault. It is a digital gatekeeper that decides when and if you can spend your own money. If you want to keep the keys to your financial life, you have to understand these hidden rules before they hit your monthly statement. The digital limbo is real. We've seen cases where people sold their cars, deposited the $5,000 check, and had their entire account frozen for verification right as their rent was due. The bank didn't care about the eviction notice. They only cared about their AI's risk score. This is why you need a BankB plan. Keep a small amount of cash in a local credit union that doesn't use the same aggressive AI as the big national chains. Stay sharp, diversify your funds, and never assume the bank is on your side without verifying it first. The 2026 banking reset is designed to protect the system, not the individual. Your job is to make sure you don't become the collateral damage of their new security protocols. This is Tax Hack Pro, and we are auditing every line of the 2026 financial playbook until every dollar is accounted for. Share this video with your family and coworkers. Most people won't know their paycheck is at risk until it's too late. I'll see you in the next investigation, where we break down the new 2026 rules for IRA distributions. Stay vigilant.